what are some common mistakes that I see? And what I'll say is that, I see a lot of errors in cost basis calculations. We spend a lot of time cleaning those errors up with taxpayers. And it's not just, the errors that we see come from taxpayers, it comes from other firms that are performing these calculations. So, as a taxpayer, you need to be diligent in checking the quality of this work, whether you're doing it yourself or whether you're working with a firm, because there are many variables that go into this, and there's many ways that you can end up with the wrong cost basis calculation. So, I see a lot of taxpayers just basically, like I was saying, just treat the software output as reliable substantiation of their tax positions and calculation, and of this isn't going to work. I also see a lot of taxpayers not doing important due diligence steps, such as comparing their calculated ending holdings to their actual ending holdings. A lot of times, if they did this, it would show variances or errors in their calculation that often go overlooked. And this is particularly problematic because if you do have ending basis issues, again, they're carrying into future years. Another issue is not checking all the assumptions that went into the calculation and also not documenting them when it comes to untraced withdrawals or deposits, for instance. How is the tax software that you're using treating that? Are they treating it conservatively, aggressively? How are you documenting that? A lot of times these things go overlooked. Revenue Procedure 2024-28, from the shift to universal to account base, that's another big issue that I see many people overlook and are still not compliant with. So overall, you need to make sure that you are doing your diligence, taking all these steps that I listed, and then documenting them, and then making sure that you save all of the reporting that gets produced from these efforts. So earlier this year, I gave a speech at Denver where I said that we are entering the digital asset compliance era, and that is what we are currently in. 99DA is the first step to making these transactions more visible to tax agencies, including the IRS. And we're going to see the compliance environment for digital assets to continue to increase in complexity as time moves on and more reporting with the DA phases in, international reporting with CARF phases in, and we start to see tax legislation get implemented, which will change more and add more complications to some of these considerations when we're doing the accounting and tracking basis. So it's more imperative than ever to get this process done and get it done right, to go back into your historical accounting, get everything calculated correctly, and get that cost basis reconstructed so you can actually defend this going forward. And at Camuso CPA, we have not only been warning investors to avoid this issue since 2016, but we have been doing the historical accounting and cost basis reconstruction since 2016. So regardless of the issues that are embedded in these calculations, the level of complexity that you may have in your portfolio on chain, our team at Camuso CPA can assist with this. We follow a detailed reconstruction process that will deal with all the issues that we discussed here in this video. And we have done this for thousands of clients. So if you want a defensible cost basis and to finally get rid of these compliance headaches that have been haunting you in your crypto portfolio, sometimes for 5 to 10 years, that's where Camuso CPA can come in. We can take you through this whole cost basis reconstruction process